Let's talk about the trading day ahead here. Bob Bruska, Fact and Opinion Economics, with me in studio. Tony Danaher, Guild Investment Management, with us from Los Angeles. Of course, Ashley in London. By the way, Ashley, did you hear our last guest saying that you Brits are a pessimistic bunch?
He is absolutely right. We do tend to take, if there's one way to go or another, we'll probably take the less optimistic route. It's just, if you expect the very least, you can always be surprised philosophy.
That's very true, I guess, in a lot of ways. Whereas Bob Bruska has been very optimistic of late. Bob's been on the show a number of times. I don't know, Bob, how do you feel now? The Beige Book came out yesterday. Maybe it was cautiously optimistic. Things are getting a little bit better. We'll get some jobless claims data today. Where are we in this economy, in the turnaround?
Well, the Beige Book, as I was telling you, the Beige Book is beige. It's Fed never goes over the top. The Fed always kind of gives you that dull background color, but it tells us the economy is recovering, that it's a slow recovery. It's, the image you get is a guy running in Jell-O, a vat of Jell-O. He's making progress, but he's not going to go anywhere.
Right.
And I don't know that that's true. I mean, history would lead us to believe that there are some much better times lying ahead of us. But
there's still tough. I mean, the job situation, for example, even in the Beige Book, what they painted just about across all their regions is difficult. So I know you've been pointing to trends improving, but we still got some work to do, don't we?
Of course we do. We're still losing jobs, but we went from minus 750,000 losses to minus 200 in rough terms, and that's good.
What about the claims data we'll get today?
Well, the claims data are the fly in the ointment. Claims fell nicely from their peak. They gave us a good, strong signal that the recession would be coming to an end, but then they've kind of stopped. I mean, the announced corporate layoff data show us that the layoffs, the planned layoffs are coming down, and that they're coming down fairly quickly. That's a good sign, but there are still an awful lot of layoffs going on that, and not enough job creation underneath it, to make up for it.
All right, so we still got to get through that. Let me get Tony to weigh in here real quick. Tony, why don't you take the markets for us? We've been up 4 days in a row. Ashley has pointed out 5 days in a row in Europe. I don't know. Take a breather here or what? What's next?
They're due for a rest. Ashley alluded to it earlier. We were supposed to get a sell-off in September, but that boogeyman hasn't materialized yet. We're a third of the way through the month, and the markets just keep going up. Investors have a lot of cash on the sidelines, and if you're looking for opportunities overseas, you've got a declining dollar that's increasing the value of foreign assets. So there's reasons to put money to work. Everybody's thinking that the pullback's going to come, but it just hasn't been here. And it's possible we could rally through the end of the year as underinvested managers have to put money to work, to catch up on performance.
Yeah, that seems to be the logic that's still out there from a lot of folks. Hey, Tony, thanks a lot for all the time in the middle of the night out in L.A. for the last couple of hours. And Bob Bruska here in New York. Thanks, Bob. It's always good to see you.